Okay, welcome back to the ICT course. This video will be on all the basics that you need to know about institutional order flow. So again, before I teach from my perspective, I just want to give credit to ICT himself for all of these concepts that he's taught about. So if you do want a deeper understanding of all of these contents and all of these concepts I'm talking about from his perspective and just raw ICT content, then check out his channel. So institutional order flow is effectively what it's called. It's the flow of orders of the institutions. And so this could be a flow of sell orders with pullbacks to supply zones. But the charts give you a footprint of the bias and order flow of the big institutions. And then for this, you can use order blocks and FVGs to see the areas where the order flow is being respected. That's what I use. And it's going to give you your current market bias. So hopefully you can get a picture of it from this diagram. Now you can see supply zones getting respected. Here, order flow is bearish. And here, break a block, maybe FVG. Another FVG getting respected, order flow is bullish. This is a very simplified example, and this isn't really what you're going to see in the charts too often. Sometimes you will on higher time frames, but this is just a simplified version of what you can look for. Look for stuff, order blocks and FVGs getting respected, and that shows you your bias. Okay, sorry to interrupt, but I'll try and make it quick and useful. I've started a premium Discord group if you do want to accelerate your trading journey, and I've got a few different options that, depending on where you are in that journey, you can take. So firstly, I've got a monthly mentorship where I do weekly calls, give you my trading setups, as well as support from me and a strong community of determined traders for just $5 a month. I've also got a complete SMC course with everything that you need to know in one place, as well as the strategies that I trade on funded accounts with proven results. And also comes with a free 30-minute meeting to accelerate your trading journey and fix any issues you have. And then finally, if you want a more personal approach, then I have a few spots for one-to-one mentorship with monthly or more regular calls and unlimited, pretty much 24/7 access to me. Any questions you have, just send them my way, as well as a tailored learning path that I will create for you to get you profitable. So thank you for listening to that. Definitely check out if you're interested in any of those options, and let's get back to the video. So soon I'll just go into an example that ICT uses on the charts so you can get a clearer picture. He does also have a video of this, so if you want to check that out as well, or instead, totally up to you. But basically you're doing top-down analysis using the monthly, weekly, daily, 4-hour if you want chart to get your overall bias, and it does work on all time frames. Obviously, if you use higher time frames, then it's going to be more powerful because the order flow on the higher time frames is where the actual moves are happening. But you can see order flow on the lower time frames if you want to scalp intraday. That's also possible. So just keep that in mind. I prefer to use higher time frames to find order flow, and then look for entries on the lower time frame. But whatever works for you, that's up to you. Okay, so I'm just going to go through ICT's example on institutional order flow. He did it on EURUSD. If you want to check out his video, then go ahead. And this is just kind of how I interpret it. So we start off here, and what you can see is you got your push up and then a push down. So you're looking for the last bullish candle before the push down. Now you might call it this one, but ICT calls it this one. This is where the volume was pushing up before some consolidation and a push down. And so he marks up from the body to the wick, the open to the lower high, depending on which order block you've got. And if I can just get this out, and as you can see, price returned to it pretty much perfectly. You know, it won't always be like this, and on some different brokers, it does push through. But you're looking at this whole candle, basically, and it's also matched up with some imbalance here, something he didn't really talk about, but I noticed it, and it's pretty obvious. You can see there is some imbalance that also got filled. You know, there's this liquidity void from another video that we talked about. You got this liquidity void from these big bearish candles, leaving loads of space, loads of FVGs for price to return to and fill. And so once price has reacted off this order block, we're looking for the next most likely place that liquidity will be taken. And this gives us our order flow in a sense. And what you can see down here is there is going to be some liquidity resting below these lows. This is a liquidity pool. A lot of retail traders will place their stop loss here, as will some institutions. You know, this is the willing and unwilling liquidity below this zone. So this is the place to target. This is where the institutions are going to take price. And as you can see, they do. With more liquidity void, you got bearish candle after bearish candle, taking out this price, sweeping liquidity before moving up and then moving back down. And so once liquidity was swept here, you're looking at where prices are going to move next. And the likely place is, again, this order block. You could mark it up as the whole area, or again, as ICT does, you could just mark it up as this. And it doesn't matter that, you know, price wicks above it. That will happen. You're not going to place your entry like on the wick and then stop loss at the open. This is just to mark up. That's just something else to note. Not truly important, but you got your order block here that price does tap into while taking out liquidity here before pushing up, just to kind of give you some more understanding of why price reacts from this point, liquidity and order block. So this is on the monthly time frame, and as you can see, your order flow here is bearish, your order flow here is bullish, order flow here bearish again, and bearish. And so I've just marked it up to show you the bearish and bullish phases. You go, as you can see, red for bearish, green for bullish. And if we go down to the weekly, then you can see it very clearly. You've got bearish price action, bullish, bearish, bullish, and bearish. And it looks really clear when you mark it up like this. And I'll just show you a few ways that ICT marked up his order flow here. So the first one was actually in this bullish zone. You can see the wick of this candle he used as a kind of rejection breaker block, I suppose. And he used it, and you can see price, broke through it, returned to it, and took off again. These are the kind of things you can look for to confirm your order flow on the weekly time frame. And then something else he marked up was the wick of this candle, used again as a kind of rejection breaker block. On the other direction now, you can see price broke through it, returned to it, and then carried on down. And he likes to use these a lot. The one on this chart isn't as clear as his, but this wick here did provide push down, pull back to it, and another push down. And he also used one here. So these are the same kind of concept that you can look for in the chart and just repeat yourself. And so one way you can use this is wait for price to have a pullback reaction, and then have a look back, see if there was any hidden order block, rejection block, something like this that price reacted from. And then obviously you've got your normal order blocks you can mark up like this, either as he does, just the bodies, or wick to body, or just the whole thing like I do. And you can see price returns to it, and you've got your bullish order flow here. And then in this case, again, you can see your order block here gives you a reaction from here, showing that you've got bearish order flow. And this is the direction that price is moving in. You've got your liquidity void formed, more bearish candles, more bearish candles. The bullish candles is pullbacks to some PD array of some sort. And this is giving you your institutional order flow. You can clearly see that in this section of price, it's moving downwards, and all the premium arrays are getting respected. And then you can also go down to the daily. So if you go down to the daily, then what you can see again is more of these order blocks getting respected. So you can see here the last bullish candle before the push down, you got this area, push down, price pulls back to it. Institutional order flow is clearly bearish from this. And this is the same for when looking for reversals. How do you know when the institutional order flow is changing from bearish to bullish? Well, you can look down here and you see you get market structure shift, price pushes up, creates an order block here, demand zone, market up, price returns to it, and then pushes up again. And now it looks like we've got bullish order flow. And so then when price returns to this area again, taking out these lows, we can expect price to continue up, which it does, provides push up, pull back, push up, all the time respecting these discount arrays. This order block here, any imbalance, all this kind of stuff. Market structure as well, if you just want to go back to the basics. Market structure is bullish on the major side. You have a small correctional bearish market structure, but the main market structure is bullish. And price is returning to these order blocks. You can mark them up everywhere. They are getting respected. There you got this. I know it's a bullish candle, but for me this is still a bullish order block. When you have a huge bearish candle before the big one up, I don't like to mark all of that because that's just not very nice. So you can just mark up the indecision candle before the push up. That's what I do. And also imbalance getting respected. In this area here, I know my chart's getting full of random coloured red and green boxes, but hopefully you kind of get the understanding. You're just looking for order blocks, FVGs, liquidity, all of that kind of stuff to show you which direction price is moving in from the institutions, which way they're pushing price, and trying to figure out where is the next draw on price, where is it heading, what's it going to take out, and what's it going to do when it gets there. So hopefully that's given you a better understanding of order flow. If not, if I'm rubbish at teaching, do just let me know, but also check out ICT's video on it. But otherwise, that's going to be it for this video. Thanks for watching, and I'll see you in the next one.